Okay, from one important macro discussion to another, Peter Berezin, who's Chief Strategist at BCA Research, joins us on the sidelines of the CFA conference. He spoke to us earlier about how he's viewing risky assets across the world. Peter, great to have you on the show. Risky assets worldwide have been posting a big rally. Is this rally justified, considering the economic indicators, are showing a bit of over-enthusiasm?
I think for the most part, the rally is justified. It seems to me that the global economy has entered a reflationary window where the fears of deflation that so many investors had are subsiding, but the risk of excessive inflation is still nowhere on the horizon. And so as long as that remains the case, I think the path of least resistance for risk assets will be higher rather than lower. And indeed, if you look at the economic data, it generally has been pretty strong. You can see that in the uptrend in purchasing manager indices. You can see that in the upswing in leading economic indicators. Global growth is accelerating. Investors are taking notice.
Peter, afternoon, wanted to understand from you as to whether or not the U.S. economy is going to be the leader of global growth given the Trump-led initiatives that lie ahead and otherwise too.
I think the U.S. economy will do reasonably well this year. We think that the Fed will be able to raise rates probably 3 times. So we're certainly not calling for major problems for the U.S. economy. That being said, I think investors have gotten a little bit ahead of their skis on Donald Trump. Yes, there are many aspects to Trump's agenda, the deregulation, the tax cuts that investors can and do welcome, but there are also some negative elements, especially with respect to his protectionist plans, which investors right now don't seem to be giving enough weight. And I think that's a mistake. I think for political reasons, Trump cannot go back to voters 4 years from now in Michigan and Ohio and Pennsylvania.
Peter, allow me to come in here. I'd like to cut across to Mukesh Ambani speaking.
Optimistic and idealistic group of youngsters, because I spend a lot of time with my children and their friends, and they are all between 21 and 25, and I know that your generation is very, very different from ours. So I again say, never before have I seen a more committed, optimistic and idealistic group of youngsters such as the ones that I see in this generation.
All right, that's Mukesh Ambani giving a motivating speech talking about the millennials and this generation. Didn't drop any hint about earnings for Reliance Industries, which are slated to come out later today. If he does, we will go back to that that convocation speech. But Peter, sorry to interrupt you. You were making the point about buying risky assets. Now, the reason we ask you about that is because central banks, particularly the Fed, have talked about monetary policy normalization and exit from accommodative monetary policy stance. How many rate hikes do you foresee the Fed to announce this year?
We think probably around 3 hikes is the most likely scenario, which is in keeping with what the Fed has been guiding. Now, of course, this time last year, the Fed had pledged to make 4 hikes and only delivered 1 during the course of 2016. I think this year will be different from last year in the sense that a lot of the things that constrained growth last year, the sharp decline in energy sector capital spending, the inventory cycle, which shaped a lot of growth from the economy, as well as the trouble that the U.S. economy had in the housing sector. Residential investment was actually quite weak last year. All of that will fall to the wayside, and we're going to see reasonably strong growth, allowing the Fed to actually raise rates more or less in line with its existing plans.
And finally, Peter, what exactly do you make of the economic situation in India? It's a bit shaky for a variety of reasons. Your thoughts on the recovery ahead?
Well, clearly there are risks around the demonetization experiment, and in the near term, growth will suffer. Over the longer term, I see it as a positive development. India has a very large informal economy. These efforts will help to reduce the size of the informal economy relative to the formal economy. And of course, publicly listed firms in India will benefit from that, will benefit from having an economy that is a bit more modern and is geared more towards the formal rather than the informal sector. I think what's critical ultimately is whether the rest of Prime Minister Modi's agenda can and will be implemented. And I think a lot of investors are enthusiastic and optimistic that it will be, but there will be pressures down the road. Historically, India has had a problem with populist policies that are geared at a statist outcome rather than a free market outcome. And the risk, I think the longer term risk, is that the reform agenda gets derailed and we go back to the battle days.
Peter, thanks very much for joining us and giving us your perspective. That is another important view coming in from BCA Research on the sidelines of the CFA Society conference in India. BCA Research, of course, is one of the largest hedge fund research firms in the world. So, their opinion matters. We'll take a break then, but when we come back, focus on the markets, get you also up to date with what the market mood indicator is suggesting about sentiment.